Good morning, and welcome to the Leap Podcast, brought to you by Leap Digital Investments. This is the Monday market update for the 24th of November 2025. I'm Patrick Penn. The Fear and Greed Index closed the weekend at 11, formerly in extreme fear territory and lower than the levels recorded during the FTX collapse. 99% of short-term holders are now underwater, with the $89,000 level representing the deepest capitulation on record. Over the past week, they realized more than $4 billion in losses, the highest weekly figure since November 2022, while 630,000 BTC were withdrawn from exchanges in a 48-hour window. The combination of extreme realized losses and large-scale off-exchange movement is historically consistent with major accumulation phases. Bitcoin is trading at $86,596, up 3.3% in the past 24 hours, and currently testing the average cost basis of the 2025 spot ETF buyers for the first time this year. Despite the price decline, US spot Bitcoin ETFs recorded $238 million in net inflows on Friday and have seen positive flows in 4 of the past 5 sessions. Spot volumes reached all-time highs last week, even as $2.2 billion in leveraged positions were liquidated. Order book depth analysis on Binance shows the strongest sustained buy-side absorption of the entire cycle. On the policy front, Treasury Secretary Bessent confirmed the removal of remaining regulatory impediments to Bitcoin's innovation. President Trump reiterated his intention to sign comprehensive crypto market structure legislation before year end, and Federal Reserve Chairman Powell described Bitcoin as digital gold in public remarks. A strategic Bitcoin bill has been formally introduced in Congress. Counterbalancing these developments, Morgan Stanley has proposed excluding companies with greater than 50% of their balance sheet in a single crypto asset from major passive indices, a rule that would directly affect MicroStrategy and similar corporate treasury strategies. Technical support is clearly defined between 84,000 and 86,000. The weekly RSI is at its most oversold level since the 2008-2009 period. A close above 90,000 would reclaim the price range and shift momentum. Ethereum is at $2,834, up 4.3% over the past day and defending the psychologically important 2,800 zone. The Fusaka upgrade, scheduled for the 3rd of December, introduces minimum L2 data fees and is expected to increase network revenue by a factor of 5 to 10. Solana, however, continues to gain share in daily active users and transaction count, underscoring the competitive pressure on Ethereum's dominance. Solana trades at $131, up 4.2%. A governance proposal was approved last week, doubling the annual inflation decrement rate from 15 to 30%. This reduces token issuance, potentially saving the chain roughly $2.9 billion at current prices over the next 4 years. The spot Solana ETF recorded its 18th consecutive day of inflows, exceeding $500 million since launch. Across the broader market, altcoins now account for 60% of Binance trading volume, while Bitcoin and Ethereum combined is only 20%. Capital seems to be rotating aggressively into AI agent tokens, privacy protocols, and gaming ecosystems. Macro tailwinds remain supportive. The Bank of Japan unveiled a $135 billion stimulus package, and Fed funds futures are pricing in a December rate cut with high probability. In summary, we are seeing the most extreme fear, record capitulation from recent buyers, and the deepest dislocation between sentiment and institutional flow this cycle. Historically, similar market setups have often been followed by strong periods of performance in the crypto asset class. That concludes the 24th of November 2025 market update. Please check the description on YouTube or Spotify for more information. Remain disciplined, remain allocated. Thank you for joining and listening to the Leap podcast.